Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of December 9th, 2024. Let's get started. SEAF signals for this week. We maintain consumer discretionary, XLY from last week. We are replacing industrials and financials with technology and communication services. Both technology and communication services came in relatively strong on the trading week. Technology at 1 with a 0.74%. That is a pretty extensive increase in for technology. Technology has been, as we're going to see in the rainbow charts, really up and down heading into this final leg of the fourth quarter. We've just been seeing a lot of radical flow movements in and out of technology. Overall, and I'll talk about this a little bit more in the heat map, kind of a reshuffling week here for the SEAF model, but we do maintain consumer discretionary a bit, taking a little bit of a break. Energy remains weak, and the run for financials appears to have stopped. This is one trading week. We have been pretty strong in financials going back the last several weeks, so we're not overreacting, but it does push it out as a SEAF signal, a bit still favored due to strength in the tactical month and the strategic quarter. Going into our heat map. Heat map isn't as nicely aligned as it was last week, though it was a bit of an aberration to have ones and twos and threes all kind of lined up. So consumer discretionary maintains our top rate, strong through 3 time periods, but very much being held strength being in the more tactical month and strategic quarter as this trend is getting into a little bit more of its senior stages. We have been in consumer discretionary for a little bit. As I mentioned, technology came in really strong, and communication services as a 2 at 0.22%, relatively strong as well, with having some positive momentum from 4 to 3 to 2, which is what we like to see. Not as much of the green up top as I normally like when this thing is really kicking off, but the reds do seem to be corrugating at the bottom, which is also nice. A little bit of life out of consumer staples, but this ad's only at a 0.1% for the trading week, and nothing really sitting with any other, but we are seeing that positive momentum. So we're going to keep an eye on consumer staples, though it is still relatively lowly ranked due to a 10 in the strategic quarter and a 7 in the tactical month. One thing I wanted to note was for the last 4 or 5 days last week, we actually had a net outflow of money from the 11 sector spiders. Again, I think this has to do with a little bit of reshuffling, potential profit taking coming out of financials, and we have been relatively stable for the flows over the last couple of weeks, so kind of due for a little bit of a shuffle. Heading into our rainbow charts. Energy. We've kind of started to see energy make a little bit of life. It has resumed trend. So, we have this general underperformance trend that we are seeing in energy. We saw a little bit of life. We're back down into this deep void, and we have a corresponding relative outperformance. We had a little bit of a move up when we walked into favored, but looks like we're continuing trend with energy. Next is financials. We had a real strong outflow in financials. As of the video last week, financials was 3 across the board, or overall ranking of 3, which is 1s for each time period. That has had a significant drop off. We have seen that turn in the relative underperformance versus SPY, though a bit still in a upward trend. We are headed in the wrong direction with financials. Can't explicitly say what that is, but it could be some profit taking as financials had quite a bit of a run, as you can see with this relative outperformance versus SPY ahead of the end of the year. We're going to want to look at financials again next week just to see how those flows are continuing. Is this starting a new trend, or is this a similar move that we saw in the end of July, early August, where we had a nice little run up, nice relative outperformance trend, went sideways, and then made our next move higher. So this is just something to keep an eye on. Again, still favored for financials, not a SEAF signal, but we're going to have to track these flows as they go forward to see if this is a continuation trend or if we are starting a new downward trend in financials. Looking into healthcare, healthcare continues its downward spiral. I really do like, as I mentioned, sometimes healthcare is our worst ranked sector. I do like to show that this model does several things for you. It allows you to tell you where the money is flowing in as well as the money flowing out. And healthcare still relatively underperforming versus SPY and making all no lows for the last year in its relative underperformance. So healthcare continues to be a deep avoid, and will continue to be so as long as we continue to see the flows. Relatively strong outflows for energy at a point minus 0.43 outflow. Not quite the worst. That went to financials at minus 0.47, but in that same vein. Moving on to technology. As I've been mentioning, technology has been very much jumpy in terms of how much flows we're seeing in and flows seeing out. As you can see here, we were nice upper favored a couple of weeks ago, down into deep avoid, and then shooting right back into upper favored. Technology more or less seems confused, kind of highlighting a little bit more right now, looking into that relative performance side of this chart, as we are really seeing some whiplashes in technology in terms of its flows, and mostly sideways going back to the last couple of months. I think people are still trying to figure out what technology is doing. Did we kind of exhaust the AI, all that AI money flowing in, or are we, ready for a new leg higher? But relative performance for technology has been more or less sideways. It is a SEAF signal for this week due to the strength of the incoming flows. Ideally, we see some sustained flows similar to we did in the beginning of the year, even in the mid part of the year, where we can kind of ride this trend a little bit. Ideally, this takes another leg higher and we get some continuation flows. But technology, an interesting signal at this time, just due to the nature of the aggressiveness of the flows flowing in and out of technology. Consumer discretionary. Consumer discretionary has been very strong for us. We've seen, unlike technology, consumer discretionary has been very consistent and stable here. We are continually sitting in that favored to upper favored ranking, and you can see in that relative outperformance chart, side of this chart, that we are seeing some really nice relative outperformance versus SPY for consumer discretionary, as it has just been a consistent grinder, flows through all different time periods. We did see a slight weakening in the flows compared to last week, but this thing has been relatively strong. So, I don't think managers are taking their foot off the gas, but they're maybe not accelerating into consumer discretionary as strongly as they were just a couple of weeks ago. But nice and consistent, upper favored. Momentum is definitely there in consumer discretionary, and that is highlighted in that relative outperformance chart, which is doing real nice and is actually approaching this upper resistance here for consumer discretionary. So we want to keep an eye on this as well as the relative outperformance approaches this mark. Last but certainly not least, communication services. Started looking at communication services a week or two ago as we've kind of started to see this positive trend in the score, really correlating with a positive relative outperformance trend. We see these things. This is kind of a setup. As we head from avoid into neutral and kind of start to tickle into favored, we do see often see nice relative outperformance trending on the bottom part of this chart as well. Communication services makes its way into upper favored or into middle favored. It is a SEAF signal this week, and we are seeing some nice relative outperformance in the chart. So we'll look for that to continue. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.